Good afternoon, cannabis traders. It's Mike from MJ Stock Trader. I'm with Dan from TheChartGuys. We're going to review some cannabis stocks. Dan's going to provide some insights on what the technicals say going forward, heading into 2022. Give this a retweet. Let people know about it. I have in the tweet, I have a link. I finished Dan's course. He has, I think it's about 10 videos on your YouTube channel. I think if you've never done technical analysis, it's the best starting point you could get just going through it. It's explained with nice graphics, very simple. And sometimes we miss the simple things. You know, we jump into the advanced stuff. We don't really get the remedial basic stuff that you really should have as even a fundamentals guy. You should have that basic technical analysis, supply and demand. Why do stocks move forward or down? You know, you got to have that kind of basic understanding. So check that out. So Dan, welcome. Tell people a little bit about yourself. And I think you provide a great service out there. Me and Dan we have a friend relationship. There's no business relationship. He's not paying me. We just have a nice, great relationship. And I think he's given me some time. So I want to let him give a shout out to his service that he offers.
I appreciate that, Mike. Glad to be back. So yes, I'm Dan from TheChartGuys, trading 11 years at this point. Started in the cannabis sector back when they were penny stocks. There were only 8 names you could choose from. California was just voting for the first time for legalization. So I've been following the space very closely since then, and then started a service teaching other people how to trade with technical analysis over the last 5 years, put out 7,000 plus videos on our YouTube channel. So a bunch of free content. And the course that you're talking about is our, base level free information. Any of my friends that have any interest, I say, take this course. If it speaks to you, if you get into it, then you go deeper. But that is your entryway as to whether or not, you want to go further. So I am looking forward to continued opportunity in the cannabis space, but I'm not ride or die in terms of buy and hold. I know there are massive cycles, and I look to time the opportunity and patiently wait for that opportunity using technical analysis and trends and volume and indicators and everything to help me with my trading.
Yeah, for technical analysis, people don't understand, there's long-term investors, but when you're doing day trading or technical analysis, going short or going long, it really makes no difference, right?
The biggest misconception people have that are, just scratching the surface is, okay, well, you can't predict things. And no, I'm not saying I can predict things. I put myself in probable scenarios. I know what is a high probability scenario, what is a good risk reward return. I'm wrong as a day trader. I'm wrong dozens and dozens of times a month, but I'm right more than I'm wrong. And again, it's just the constant experience and being able to replicate results. I've seen this pattern before. I've seen this hype cycle before. I've seen this euphoria before, and applying that to make profit.
Yeah. From my understanding, technical analysis, if you go to Vegas and, you go to the roulette wheel, it's red or black. That gives you, everyone forgets the 3 green things at the end, right? So it gives you less than 50%. But technical analysis is like, okay, I've seen this before. And it gives you a higher percentage chance of success. It's not like baseball where if you hit 300, you're successful. You want to hit about 700, 800, somewhere around there. Just be right more than you're wrong, right?
Yeah, it honestly, it all depends on the trade setup. So style that I have shifted to as I've gained more capital over the years is I stop out break even very often, where I'll make a couple entries. I'll get a little bit in my favor in terms of direction. I'll sell a partial position and I'll stick my stop at break even under a nearby support level. And that's my way of being a bit more conservative. I'm not going for home runs. I'm going for base hits on a daily basis. I can see bigger picture when there will be more of a home run setup. For example, with the cannabis space, I know that next year, late summer, I'm looking for a more swing trade mindset, because seasonality with voting seasons in this sector over the last 11 years is where I've made a lot of money. And just knowing that we will have a setup to run into the fall voting season, because we will see media coverage. They'll be talking more about which states are going to be voting for legalization, which states are going to be voting for medical. And it's a seasonality aspect where I know I will get in before that media coverage, before the buzz starts building, and I'll sell into it. I'll sell into, the day that we hear about the state that passed legalization. And that is, again, that's a replicated system that's played out now at least 3 or 4 times over the years. I did the same thing when Colorado and Washington legalized in 2013 or 14 or whenever that was.
Yeah, getting ahead of catalysts is important no matter what you're doing, technical, fundamentals, whatever. But, just getting ahead of that wave maybe of moves higher. But one thing I think you understand more than most that I've tried to impress on a lot of investors is taking profits, right? So you talk about a stop loss. It's kind of hard to stop loss on some of these OTC stocks. So maybe a little more on the MSOS and things that are a little more liquid, don't swing as wide. But you got to mitigate your risk with some stop loss potentially. But you also should take profits, trade around a core position. If you're especially if you're, like I say, people on Twitter, they're long-term investors, but they have a trader mentality. They're following the day-to-day movements. They're not taking profits. So it drives you crazy when Verano goes from 10 to 12, back to 10, back to 12, back to 10. It's like, okay, if you're trading around that, you're making a fortune. If you're holding it forever, you're just getting frustrated.
Yeah, it's exactly as you said. And taking profit, for me, when I make mistakes, I want my mistakes to be leaving money on the table, not giving my profit back. That's priority number one. And, you see people saying we're just getting started after a big move has already taken place. It's just this mindset of whenever you see that, you recognize, okay, I've seen this before. I've seen this euphoria cycle before. If I'm feeling euphoria, if I'm looking in my account and feeling great about things, I'm taking some off. If it keeps going up, great, I've still got position. If it starts dropping down, great, I sold some and locked in profit. So again, break up your position into different mindsets. I have friends that do this and it's all or nothing with them. They're either in a position or they're out. But I would highly suggest breaking things up. I'll sell a quarter of my position if this happens, if we get to this price. And again, it's the most forgivable psychologically when you do that, because you can put a positive spin on it no matter what. Great, I've still got a position, we're still going up. Or great, I sold some and we're pulling back and I've got capital and cash waiting if I want to buy the dip.
Yeah, so I guess before we go into some of the stock tickers, I would like to ask, what are the biggest indicators you look for? You always see, I think the basic technical analysis is you're looking for those, higher lows, higher highs. Some guys go into the MACD, some go into RSI. What is the key? If you had to pick one or two things that really stand out to you when you're trading, what is that?
So volume, when I'm looking for a major cycle shift, it depends on what kind of market you're in. So if I'm looking for a cycle shift, like we're looking for in the cannabis space, I want to see volume at the bottom because volume climaxes often signal tops and bottoms. So we're hoping that the big time volume that we've been seeing in MSOS over the last month plus is indicating a cycle bottom. And like you mentioned, trends, higher lows and higher highs, that's now what we need to see come from here. And we need to see increasing bull volume on the bull moves and declining bear volume or lower bear volume on consolidation. So that's a major factor. I love RSI. I love playing oversold bounces. My favorite oversold bounces are in strong market environments. So if we are in a daily and weekly uptrend and we drop down into oversold conditions, that's when I'm looking to play that bounce, because oftentimes in a strong bullish market, hourly RSI dropping under 30, indicating oversold conditions, oftentimes will give us the daily higher low and our pivot. And it'll be the best opportunity for buying those dips. So RSI is great, but when you're in a long-term downtrend like we're in right now, RSI is much less helpful. So it's important to have that trend first, and then that indicator becomes a lot higher probability.
Yeah, I think with RSI, my experience, if it's a nice sine wave where you're hitting 20, then 80, 20, then 80, but it seems like we're trapped in under 40 forever, right?
Yeah.
So it's always weakness. But yeah, so you ready? You want to start with MSOS, or what do you want to start with?
I want to start with the broader market first things first. So we know the broader market has been healthy. We're up at all-time highs. So this is the S&P 500. We've been chopping around the past couple of months, but again, we're up at all-time highs. So we know overall broader market is doing well. That being said, under the hood, there's a ton of individual names that have been really underperforming the last 6 to 8 months. And a lot of them are growth names. A lot of people know Kathy Wood, but her ETF has been dropping significantly. We've had Chinese names because of all their issues. They've been in prolonged downtrends. So there are places where there's been significant weakness. And I'm looking for a sentiment shift that shows me a risk-on environment in the market, which means, you reach a euphoria point in the market where people will just throw money at anything. And that's when rising tides raise all ships. So I personally use the Russell 2000 IWM as a gauge for risk-on mindset. For me, I look at crypto, cannabis sector, and IWM. Those are my three guides for if these three names are doing really well, then we're in euphoria mode in the market because investors and traders are willing to put money into the highest risk highest reward assets. So IWM has had a great 2 weeks here. It's trying to confirm a little daily bull flag right now, and it's trying to see follow through. And you might say, well, how is there any correlation here? When I'm looking at correlation, I look at IWM on the weekly time frame, and I look at this big 5-week pullback. And it was just a straight drop for the last 5 weeks. And we can now see that little relief bounce is currently underway. And if I look at MSOS, it's coming from a very different standpoint, but it is the same thing. It's that big 5-week drop, and that weekly bounce is now trying to get going. And it's a bit of a laggard because IWM's bounce has been a little bit more significant recently. But there's many places you can look and find the same 5-week drop and relief bounce currently underway. You can find it in Bitcoin. 5-week drop and the bounce attempting to take place a little bit weaker. So when I'm looking for correlations, that's what I'm looking at. And it's difficult to communicate that with some people because I can say we're correlated in this sector with IWM. And someone looks and says, but IWM is a few percent from the all-time high. And, MSOS is 60% from the all-time high. They're not correlated at all. But you got to zoom in and watch those relationships. So what I want to see is IWM strength. I want to see cryptocurrency confidence. I want to see all of the weakest names. And right now, the rally that we're seeing, a lot of people are attributing it to end of tax loss selling. And that's entirely possible because the last 2 weeks, the names that have been the most beat up and the biggest underperformers are having solid bounces. So it does logically make sense to me that in a year when most things are doing really well, people are going to harvest some of these losses to offset their gains and have a lower tax bill. And I certainly know friends that are doing that. So it makes sense to me that is what is going on right now. But what we need to see is those trend changes on the longer term timeframes. And of course, we need a catalyst. The sector always needs a catalyst to just have confidence because people learn their lesson. And the fact that MSOS and everybody has been so beat up for so long, there's trust issues. There is a trust issue in this sector right now. And you can't tell the herd of traders and investors, no, we're strong now because technical and the chart says it. They don't buy that. That doesn't mean anything to them. If they have a reason in the back of their mind that makes sense, oh, we're going up because of this. Okay, I can get on board with that. So that catalyst is really important for a sentiment shift. And like I said, end of summer 2022, I am confident that I'm going to be making money in the cannabis space as a bull into the fall this coming year. So I use a spectrum of fundamental and technical. I'm not all technical because that's a fundamental aspect that I am going to use my technical skills to try and time things and put myself in high reward, low risk positions. So I'm watching that as far as the broader market. As far as MSOS, I'm getting interested. I have an indicator where I don't talk about markets and trading much with my friends outside of the market. There are a few times where I will do it. And generally, if I'm doing it, it is high probability. And the last 2 times I've done it were really good. It's 2018 Christmas. I made a Facebook post to my friends. This is the time where you want to be buying for long-term, growth in your IRA account. But recently, I just messaged my girlfriend for the second time in the last 6 months saying, hey, check out the cannabis space. Now might be a good time. The last time was this little short squeeze that we saw a couple months ago. But what I have liked the past 2 weeks is the fact that we saw a little bit of increasing bull volume. And I look at that and say, well, it's not that notable. This was Christmas Eve or the day before Christmas Eve. And to have the highest volume day in over a week, the day before the holiday, absolutely stood out to me because if you compare it to the broader market, that day was across the board a very low volume day, not for MSOS. And then again, we see the low bear volume on the pullback, these 2 red days, and then some more solid bull volume. This is the bulls attempting a daily trend change for the first time since we topped out on that big time move that we saw. So again, just a little bit of a shift. But the problem when you're in a prolonged downtrend is when you change the trend on one time frame, the daily chart changing to an uptrend, it just means zoom out and scout a lower high on a longer term time frame. And right now, anything under 3380 is just going to be a lower high. My dog is snoring right next to me. And anything under 3380 is going to be a weekly lower high here. And so it takes a long time to shift momentum. You change it on the daily, then you bounce on the weekly. You hope to create enough space to shape up a weekly trend chain. So again, we're not just going to, if there's no catalyst, you're not just going to overnight be in a strong market environment. You have to go through all these steps.
So is 3380 your trend change confirmation?
That right now, I am expecting this bounce. We will form with no catalyst, we will form a lower high compared to 33 on the bounce. I use fib retracements to help me gauge probabilities. So if I'm looking at this fib retracement and it just shows me, okay, we dropped this much to our low, and right now we're trying to bounce and gain that back. And at this point in time, this yellow line is a 38.2 retracement, which would mean we've bounced and gotten back 38% of the drop that we just saw. What I want to see here, anything that's under a 382 sets up the possibility for a bear flag, where you just cool things off, it's a weak little bounce, and you drop to lower lows. We obviously, as bulls, don't want to see that. We want a bounce that is 50% plus, because if you retrace 50% on the bounce, you're creating the space for a higher low and a higher high to eventually form. So the size of this weekly bounce for me is going to help me determine probabilities. If we don't get over that 382, I'm going to be cautious of a weekly bear flag that can absolutely see another leg down. And again, the mindset is, if the broader market's at the all-time highs right now, what happens to this sector if we pull back 10% in the broader market? And we are not positioned well at all for that. So I have to keep that in mind as well. But that's what I'm watching for over the next couple of weeks as we head into the start of this year. How long can we keep these daily higher lows and higher highs going? And how much retracement can we see on this weekly time frame? Can we create the space for an eventual trend change attempt? And again, it's a one day at a time thing. I'm not here to make predictions. And anybody that is using technical analysis to try and make predictions, in my opinion, is using it wrong. I am trying to determine probabilities, and every single day I'm getting more information to help shift those probabilities. So it makes no sense to me to box myself in and say, well, by April 2022, we're going to be at X price, because tomorrow I'll have more information that could potentially change that opinion. So I am very fluid with the information that I'm getting as far as what I am feeling is the most likely scenario.
Yeah, and if you, the 12-month chart you had for MSOS, it's like the perfect uptrend and a perfect downtrend, isn't it?
Yeah, I mean, it was all bulls, and the sentiment shifts like that. And you see it. It is not unique to this sector. You see it in crypto. It's happened twice in crypto in the last 4 years. It's happened. The 3D printing sector went through this probably in 2013 with just, let's pull it up, BDB, just a massive move up to all-time highs. It's way back here. Massive run up to all-time highs, give it all back. And it was the future. It was a generational opportunity. And these are the phrases that people who know how to play this game and do it for a living utilize, the herd and the people that are just going to buy and hold, and they take advantage of them by playing with their emotions is essentially what it boils down to.
Yeah, the Canadian cannabis kind of did the same thing a few years back. We did the same thing, this year, end of last year into this beginning of this year, but it's been a total downward stair step since February 10 in the US, for just looking at MSOS, right? So, okay. You want to check out some of the stocks now?
Yeah. So out of the Canadian names, and again, it's important to distinguish Canada and US. I don't have favorites. I don't play favorites. I like whoever's going to make me money. I have no allegiance to any company whatsoever. And so even, Canada versus US, yes, I can understand the fundamental argument that US is a better fundamental, but I don't engage in that at all, because I'll make money if the Canadian names are going up faster and I'll focus on them. There is definitely a difference in, as a trader, the liquidity and the volume that we see on the higher listed names than on the OTC. For example, I can, market by $100,000 on TLRY and not move the needle. And if I market by $100,000 on any of these OTC names, I'm going to be filled order after order over a span of multiple minutes, and it's going to be moving the needle up significantly. So it's a different game. And that's why you see so much dollar volume in these Canadian names, because people that are playing with real money, they can't play their same game on these OTC names. You can't market by the same kind of size. And in some
spread is narrow, right?
Right. It's a very tight spread. There's a ton of liquidity. There's market makers all over the place to help with that liquidity, and you don't have that on the OTC. So I'm definitely looking forward to that changing, and you will see the environment shift as that, and that's really something that I'm noticing, not to go off on a tangent, but as markets mature and develop. I can remember I was making posts saying CGC is now significantly correlating with the S&P 500, and people were pushing back and arguing so much with me. But when the market environment matures, you see these little shifts in how things take place. And I'm definitely looking forward to, I'll throw more money at USMJ. I'll throw 5 times as much money on a day trade if you give me that volume and that liquidity on a higher exchange. So a lot of people, everybody's looking to safe and uplisting. And some people say, we don't need that. But from a trader's perspective, if you want capital and liquidity and more people to come on in and play this game, you need that volume and liquidity.
Yeah. And that's why MSOS avoids some names like Ascend, where you only get like 20,000 shares traded every day, where Columbia Care, you get 500,000 to 1,000,000. So sometimes MSOS is not buying specific stock because the liquidity is just not there.
And that was key for me with MSOS. When it first started trading, I said, man, you got to give me $5 million a day for me to get interested. And once that volume started ramping up, this orange line at the bottom here is your 20-day average volume. We knew that, okay, things are getting for real now. We're in blue sky breakout and the volume is ramping up. And just to go back to the volume that I was talking about here at the bottom. So we had the climax volume at the top, and you can see it just slowly bleeding out and disappearing. And look at this volume now. And you have to keep in mind that I look at dollar volume because, you can have twice as many shares at 23 as you had at 55, and it's the same dollar volume. Yep. So that is an aspect of it, but there's a lot of dollar volume coming down here at this level. And I am looking for that to potentially mark a cycle bottom, just like the volume at the top helped mark a cycle top. So that's definitely something I'm paying attention to as well. But just to get back into it, VFF has my eye on the Canadian side of things. And the reason is the most recently, again, I'm more concerned about short-term price action first. And then once I see things short-term, I'll zoom out and look bigger picture. But as far as the short-term is concerned, I'm just looking at the last month. And I'm seeing that the move that we just made off of this low from 561, we just had a 20% bounce. That's significant. You zoom out, it does not look significant. But again, what it does is it creates the space for a higher low and a higher high to try and form, because you've got to change that trend. And we had this spike here back when the entire cannabis space spiked. We did not change the trend. We could not set the higher low and higher high, and we gave it all back. So the trend change is crucial for me. And if I compare this to CGC, let's say, the move that we had seen off the low on CGC was way less significant. We went up 14% and we just already dropped back. And again, the retracement, we gave back a very significant amount of that move. So CGC is battling to try and form a higher low here, but it's just so much easier for VFF to pull it off because of the amount of space that the bulls have to work with. So,
and I like to, if I could just add, see, VFF, Village Farms, the only one that I invest in Canada, because the fundamentals are the strongest. And now you're telling me the technical is the strongest. And that's just a great marriage right there.
Yeah. Over the last month, definitely. Yep. And it's just something that keeps my eye. I want to see who is standing out strong. I'm constantly comparing. I'm comparing the sector to other sectors. I'm comparing the individual name to other individual names in the sector. And people like to fight back and forth on Twitter, but really bigger picture, if you want US MJ to go up, you want Canadian MJ names to do well. And if you want Canadian MJ to go up, you want US MJ names to do well, because profits get people talking. CNBC will be talking not at the bottom when things are weak. They're going to be talking after the moves are taking place, because what gets the clicks and the headlines are the headlines of, Canadian cannabis is up 50% in the last 6 weeks. That's when the herd starts getting involved because of media attention. So I'm watching VFF to try and shift some momentum. And on the US side of things, obviously MSOS is a major guide, being the ETF. And I like how we're setting up this daily trend change for the first time in the last 6 weeks. So that gets my attention. And just for disclosure sake, I do have an MSOS position, and today I bought VRNOF. And those are my only exposure that I have right now. So just as I'm talking about this, be aware of that. Yep. So I like that MSOS is changing the daily trend, and I like VRNOF because of the base of support that's been established here. And as you said, how we keep ping-ponging around between $10 and $12. Well, clearly we're establishing a base of support around this $10 psychological level.
And that's the IPO price.
Okay, well, that makes a lot more sense.
That's basically, there's a shelf of investors that have this at $10. And once it hits there, guys like me buy it, because we see that as the IPO came out in February. If I can get it, 10 months later at the same price, why not? And it's a great company. So again, I like to marry up the fundamental and other information with your technical analysis.
Yeah, that's definitely helpful. And again, VRNOF, when it came out, I was interested in it because of the fundamental story, but the volume was just non-existent. I can't trade that. I can't even consider trading that. But again, look at the volume that is pouring in. It is a night and day difference. Even though it was twice as high, we were trading $48,000 a day on average, or 48,000 shares on average. And here we are. Yes, granted, the price is half as much, but we're trading 12 times that share count. So
Verano is a good lesson to learn for people. The reason why the volume is so low is they only had 20% of the outstanding shares out there, and then they They had 5 unlocks total. They sped it all up at these spikes that you're seeing, and now there's no more unlocks besides the M&A unlocks. But so that was a hard lesson learned for a lot of people, is they bought a stock that was on an illiquid market that was even illiquid to the other peers.
And then that unlock just adds supply downward weight on it. Yep. But yeah, once that, just like Elon Musk is, done selling Tesla in the short term and we see this big rally, that's what people are looking for, hopefully, to happen here with unlocks being done, at least in the short term.
And so if I can just point out real quick on your chart, I tell people, look for a trade-in pattern. So look at 10 and look at 12, right? The highs of 10, the lows of 10 and the highs, even I know we got hit 15, but that 10 to 12 is just there for the last, how long is that? For months.
Yeah.
So I look back at that and say, if you're going to trade this stock, you sell it around now and you buy it again when it hits 10, and not saying sell all your shares, but you sell 20% or some of your, right now we're at the high, but you're going to tell me now, because we just bought into it as a technical investor, that now it's setting up to maybe move higher.
Yeah. So again, it's just establishing that higher low, higher high pattern. I really like this little brief consolidation. This is a bull flag here. So big move up, brief consolidation. The lower wicks on these candles show buying of the dip. You close closer to the high of the day than the low. So that means that people are buying near the low of the day, and we close higher. And we just broke resistance here. I bought this morning, and my game plan was, I think I got filled here 12.20, and my game plan was, okay, if we hold this higher low, I want a position. If we drop down from here and lose that higher low, then I want to be stopped out. I want to exit that position. So my risk is 12.20. I'll exit if 11.48 breaks. So we'll say I'm risking 72 cents. And the reward potential is hoping that we see a cycle shift that lasts into the new year. And again, it's a combination of tax loss selling being done, some risk on environment in some of the growth stocks that we are seeing in the broader market. But I'm watching for ideal, in an ideal world, $10 is your cycle bottom. And looking at it from a monthly perspective, where every candle is a month, it'd be nice to see if the bulls can shift this momentum significantly enough to make a move up to the mid to upper teens. It's going to require a lot of stair step, higher lows, higher highs, but that is what I'm attempting to position for. And again, it's very low risk. I'm not just buying and saying, well, we're either going to go up or I'm going to lose a bunch of money. I have a very clearly defined, I have to see this higher low hold, because if we're going to stair step higher, that needs to be a structure that forms and remains in place. So I have been taking some small losses. I've made attempts throughout the last 5 months of entering bullish positions. And it was the same thing as you said, having this short squeeze that we saw here. Some people held through that entire move, but you've got to exit partial positions into that momentum. And that is my way that I play the sector. So let's just say this trade goes well. And let's just say over the next couple of weeks, we make a move up towards 13. So I could exit half my position. And if I did so, my break-even cost basis is now that much lower. And if I want to hold it long-term, I have that much less risk. Granted, I have less reward possible, but I try and position myself in scenarios where if I'm wrong, I have a small loss or a break-even loss. And the only way that you can do that is by selling partial positions into strength.
So I can add a few things. So people need to understand this. So I bought at 10 because I looked at the fundamentals and the IPO price. You waited till a certain point that was 20%, over 20% higher to buy it, but you probably have a way better success rate in trade. You do have a way better success rate than I do. People need to understand that there's expert traders out there that look for confirmation before they enter, not for cheap prices, right?
Exactly.
So you're trained to look for these things. You're buying way higher than I am, but there's a good chance you're going to be way more successful than I will. So it's an interesting thing. And one question I have for you on the OTC, are you putting in stop loss orders, or are you waiting to a price and just because you're so active that you're selling at that price?
I can't on my broker. I can't have an OTC stop. So it is just because I'm so active. I'm looking at the screen every day. So I've got my eye on it all. But
they get wiped out on the OTC pretty quickly sometimes.
Oh yeah. I mean,
they swing so high.
And the market makers on the open, with no pre-market trading, they're dictating where things are opening. And that's why you have some candles that look really odd. I just really dislike the OTC. I traded on the OTC the first 4 years of my career. I was a penny stock trader because that's where the cannabis names were. And I don't want to ever go back. And here I am. I'm forced to go back. But it was a huge step forward to upgrade off of the OTC exchanges, had way more success doing so. And I can't wait until we don't talk about the OTC anymore in the cannabis space.
And I tell people, when you buy a stock as a trader, you should have a sell point the minute you buy it. Is that kind of what you do?
Before you ever make an entry, you've got your stop level where you will exit. You've got your sell target where you're looking to take profit. And again, otherwise, people have the hold forever mindset. And then we see these massive swings. And it's like, well, I mean, this is how the game is played. And you either take advantage of those massive swings, or you should not be looking at these names even once a week. You shouldn't be looking if you're going to hold through these swings.
Yep. That's the problem on Twitter. Investors are watching it like traders, and it's driving them crazy. If you're going to be a long buy and hold, just don't look at it. Don't just delete the app off your phone. Okay, we'll move on.
So I just want to reiterate one point that you made, where I'm not trying to nail bottoms. Nailing bottoms is great, but like you said, waiting for confirmation. I don't care if I'm 20% higher if I have the momentum. I want to be green right away. So I will wait for that momentum. It's the same thing, when there's a catalyst. I'm holding a bunch of capital for a fundamental catalyst, and I'm not going to deploy that capital until that catalyst comes. And when it does, I will market buy and dive head first in. And I don't know if or what it would be or when it's coming. One example would be if an outside company came and bought one of the tier 1 MSOs. I would instantly market buy them as soon as I could, peers in the tier 1s, because for me, that would be a significant catalyst in the short term. So again, I want that momentum at my back as soon as I'm in. So I don't have to worry about, well, I'm red. Should I sell? Do I add more? There's no thinking. Your game plan is set. There's no emotion coming into play. If you are making decisions mid-trade, you are subject to the emotions of whatever's going on. If you're just looking at the piece of paper next to your computer, well, I said I'm going to do this, and I'm going to have the discipline to do this. That is how you skip around those emotions.
That's that Tilray-Afria merger, right? You get that news, you go ahead and buy because you know the market's going to move for a couple of days.
Constellation CGC, I mean, that was a massive spark. Yeah, those are out there. They're rare, but they happen. All right, let's see who else. We got True Leave here. So again, it's a base that's forming here. And you
last time we talked, that was your lead bull.
It was, and it shifted a little bit. It did get back the move, and most of the names did. Right now, GTBIF and TCNNF, I speak in tickers, not company names, but they are the two that stand out, and CRLBF and Cureleaf have been standing out a bit weaker. And the only reason is just that the bear breaks are seeing more follow through to the downside, more percentage follow through. And VRNOF goes on the stronger side because, again, it's the base of support. And here on True Leave now, we've got a base of support, 23s, 23s, 23s. So it's a triple low in the 23s. Okay, we're playing defense. So from going back months where we just fell through support and fell through it and fell through it, we're now playing defense. The question is, okay, great, defense is great. Can we go on offense? Can we flip the momentum so that shorts have to begin covering? And it's essential for the scales to tilt. Again, supply and demand. So supply for shares has been outweighing demand significantly. And now as we start to build this base of support and have a triple bottom, they're leveling out. And we want to see the scales tilt so that demand for shares exceeds supply and forcing shorts to cover.
And it looks like since mid-September, it's hitting that 23 and change. And people understand is short. I've never been short, but shorts are on margin, right? So they're paying a percentage while they're sitting there. So they don't want to be sitting there stuck at a shelf for 6 months, right? Paying this. And then if it spikes up, they get margin called. So you're de-risking yourself a little bit when you look at this thing at 23. And as long as the fundamentals are strong, I know you don't really care about fundamentals as much, but if there's no real negative story out there, maybe because Truly did have that negative story out there waiting for a while. And that's where we really did get hammered. But is that your opinion that when you see this 23 since September as a shelf, it kind of gives the shorts a little alert, like, okay, maybe we're done here. Let's go away and find something better.
Definitely. It shifts momentum. And these lines that I've got on here, the blue and red lines, those are exponential moving averages. And so we look for them to begin leveling out. And the weekly time frame, well, let's go to a different time frame. Let's just go to the 2-day chart where This is every candle is 2 days of trading. And you can see on our drop down, the red line was separating significantly from the blue line. And now as we start to build this base, they're getting closer and closer. It just shows a little bit of a shift in momentum and a base that is forming. And again, the bulls have a ton of proving to do. But just to go back to that mindset of forcing shorts to cover, I can give a little mini example. So looking at Canadian MJ, we at the chart guys, we trade whatever direction, doesn't matter to us. So we have people that short Canadian MJ because it's been extremely weak. And with CGC, there has been a play where we call it top fishing, where it's just the high of the previous day. And if you reject from it, you can enter a short right under the high of the previous day, put your stop right above it. Very little risk. And if the bulls prove it and break that resistance, you stop out and you're forced to buy and you're part of that buying pressure. And if you just look back at CGC, I mean, there's so many examples, but where you top out here at 1209 and then the next day the top is 1206. Or here we had a top of 1120, the next day 1108, and then we roll over. So we've got traders, myself included, who will short the high of the previous day. And today CGC was that same thing. So yesterday CGC's high of the day is 918. So on this bull move this morning, which was extended because it was hard and fast, we said, okay, we like that top fish scenario. We're going to short the high of yesterday resistance just under it and put my stop just above it. Maybe that means I short 915, my stop's at 921. So we reject from the high of the previous day, and it was a quick little pullback, but it was 2%. And my trading style is, again, I take partial profit. Maybe I exit half my position with a 1% gain. I stick the other half stop above that resistance level. I'm risk-free. I can't lose on that trade. If bulls prove it, which they did, I stop out, and I now become part of that buying pressure. So the more higher lows and higher highs that you form, the more you're forcing shorts to be a part of that buying pressure and buying at the ask as opposed to just trading sideways. So that's where the momentum shift takes place. So whenever I'm looking at a long-term downtrend, my mindset looking at CGC right now is saying, is there pressure on shorts? Well, the current price that we are trading at, if you shorted any point in the last 8 months, there's about 3 days where you'd be underwater. There's no pressure on shorts. But if you make a move up over 1120, suddenly anybody who shorted in the last 5 weeks is now red. And again, you're forcing those people to be a part of that buying pressure to help those scales tilt from demand or from supply to demand.
Okay.
Who else we got? VRNOF we did. So yeah, I'm interested in the shift that's currently taking place, and I'm watching to see in the first week of January. Okay, now that the tax loss harvesting is done, has that been enough to tilt the scales? We got demand outweighing supply a little bit over the last 5 days, 7 days. Can that keep up? And that is the biggest question. Again, increasing bull volume on the way up, declining bear volume, lower bear volume on consolidation, and that needs to continue.
Yeah, no, this is great. This is the stuff people need to see out there. Appreciate your time. People should, again, look in the link I have. I use my bike at home. It's not a Peloton. It's my own little makeshift Peloton, but I have my iPad. I just watch them while I ride my bike. Very simple, very nice videos. If you've never done technical analysis, it's free. It's on YouTube. Watch it. My goal is to take Dan's course sometime in the early first half of next year, get in there and learn some technical analysis, because I have the basics down, but there's so much I can learn. This is the stuff that you need to look at when you start marrying fundamentals with technicals. Dan's a technical day trader. That's his thing, but he's looking at these catalysts. That's how he adds into the, outside of the pure technical, looking at the charts. I like to look at fundamentals as well. I get in Verano at 10 because I look at IPO, fundamentals are here. Dan's showing me this chart and it looks like he's entering higher. And it's like, okay, I'm not going to sell my Verano this time at 12 because, these are things that kind of help up. You can marry those two things together. So I really appreciate your time, Dan. Anything you want to end with?
Yeah, I appreciate your time as well. Check us out on YouTube, Chart Guys. Plenty of free videos constantly. And one last note on your, Verano position, you can use that daily high or low and say, okay, well, maybe I don't want to sell into strength. I want to give the bulls a chance. But if they let me down, breaking that level would be letting me down in the short term. So that could be a signal. All right, well, I'm going to take some off in case we revisit 10 again.
Yeah, and I feel like we're at a bottom from my point of view in December. I think we hit it about a week ago. So I'm kind of all in right now for a little bit, but I'm MJ stock trader. I'm not MJ stock investor. I definitely have a core 80%. I trade about 20%. Right now I'm fully invested, but I will take some on the profits on the way back up. hopefully get some catalysts in January and move from there. But we're going to see if Dan will come on every month or, every other month or something like that, come in and kind of give us an update. But check him out. If you're not following him on Twitter, you got to follow him. He puts out I think you put like a daily recap on the overall market, and then you do some special stuff here and there on YouTube.
Yep, just anything that's interesting me on the day.
Yeah.
And yesterday I covered MSOS in the daily market video because it started the daily trend change attempt was starting to stand out.
Yeah, subscribe on Twitter, subscribe on his YouTube, and you'll be rewarded. I promise you. All right, let's get back to our final trades, and I know you got stuff to do, so we'll close out here.
All right, appreciate it, Mike.
All right, thanks, Dan.